Hello and welcome to Halftime Report. I'm Sonia Shenoy and with me is Mangalam Malu and Sonal Bhutra. Well, it is a disappointing start to trade for sure. And at noon, the market is at the lowest point of trade. The Nifty is down 220 points and the Sensex has lost 750 points. Now, there are a couple of pockets that do stand out. So we'll, of course, talk about that in greater detail. But the big pressure really is coming in, of course, from the Adani stocks. Adani Ports down 7%, but other banks as well are contributing on the downside. So the mid-cap index is down 400 points. The Bank Nifty is down almost 1,000 points. There was a brief attempt to recover, but that was sold into as well. So turning out to be quite an ugly day, ugly start at least for the markets. But let's see, the day is long. We also have a lot of big events coming up, right? I mean, there's the union budget next week. There's also the Fed policy next week. It's F&O expiry today. So a lot of cues to negotiate with. I guess you can safely say that this 18,200 mark continues to be a hurdle for the market.
It is, there is a weakness, a fair amount of weakness, but there are a lot of numbers which are, being reported as well. So we do have a management with us?
We do actually. So while we talk about markets, let's focus on individual names as well. Latent View Analytics posted a good set of Q3 numbers. Revenue is up 35%, while EBITDA margin is up 130 basis points at 29.5%. Rajan Sethuraman, who's the CEO at the company, is joining us now to discuss these numbers. Mr. Sethuraman, good afternoon. Thank you so much for joining us. Well, these are a good set of numbers that you've reported, but you did speak about sluggishness in two accounts. What category do they fall in? You have different categories, sub 5 crores, 5 to 10 crores, 10 to 50 crores. So which kind of client is that? And are you seeing this weakness continuing in the next quarter as well?
Right. Yeah, thank you for having me on the show. The sluggishness is mostly in the technology sector at this point in time. This is because there is a certain amount of uncertainty, and you would have heard about the budget cuts and the layoffs, right, that they are experiencing. However, we are happy to share that all the renewals that we were intending to do in the quarter that just got concluded, that's all been completed. We didn't have any cutback in terms of the current contracted work that we have, and all of those contracts have been renewed for the next year as well. The sluggishness is a little bit on new initiatives and kicking that off. But having said that, there are also a bunch of larger opportunities through the RFP route, which are in play at this point in time. We're expecting that some of that will click and fall in place in the next couple of months, right, even before the end of this fiscal year. So there is sluggishness, but it's in the technology space, and we are seeing some interest in other sectors at this time.
Sluggishness in the new business is something that Satya Nadella spoke about Microsoft yesterday as well. So that puts you all in the same company. But, margins, the 9-month margins are closer to 29 odd %. This is much higher than your guided band of 25 to 28 odd %. Are there one-offs there, or are you looking to increase your margin guidance itself and aim for levels upwards of 29% going forward?
Not really. I mean, we will continue to stick with the 25 to 28% margin guidance. In fact, it's our constant endeavor that when we sense that the margins can be better due to one-off events or in general just operating performance, we would want to take it and plow it back into the business. So we are actually formulating the plan and the strategy for the next year as well as the next 3 years. And in the board meeting as well, there's fairly clear direction, right, that we should be ready to invest ahead of the curve, right, where required. So that's what we'll be doing.
Absolutely. I think that's the next big trigger, right? The investments that you're looking at. You're sitting on a cash of around 950 crores plus including the IPO balance. And in your press release, you've said that you're actively looking at new opportunities which will add to your capabilities. What are these new opportunities now, and where will this cash be put to use?
Right. So we are talking about two kinds of things. One is the organic capability building, and that is focused on sectors like BFSI and retail and CPG, and all the assets, accelerators, and value propositions that we intend to build, right, to support that. And then we have the inorganic action as well. Our inorganic strategy as well is aligned with the sectors and the horizontals that we intend to focus on from an organic standpoint. So right now there are about 3-4 opportunities on the table where we are at round 2 or round 3 of discussions. I don't expect that it will close in this quarter, but we should have some action, right, in this quarter and next quarter and get closer to signing something. Okay. And this is a spectrum of opportunities ranging all the way from $4 million in revenue to about $15 million in revenue. So we will see how this pans out in the next 1-2 quarters.
Okay, so you do have spectrum of opportunities. You are at various stages of closing some deals as well. But just on the other side, because you have mentioned that there is a slight delay in decision-making process for new initiatives, but of course, at the same time, you're not seeing any budget cuts for now. Do you think that is something which will slow down deal wins in 2023, or will it be similar to the levels that we saw in 2022?
I think my own personal take on the current situation is that data analytics is going to be key to resolve the uncertainty and the budget constraints that organizations might be facing, because many of the data analytics initiatives are fairly core and central to drive P&L impact, whether it is on revenue growth or margin enhancement. So the conversations that we are currently having, the large opportunities that I mentioned, right? These are either mature organizations that are looking at, okay, we can do a lot more with data analytics through consolidation, driving more complex initiatives. And then we also have first movers into the data analytics space. First, or they're starting off with their data analytics journey for the first time, but they see this as an opportunity to leapfrog and set up some capability centers, right, in a location like India that can give them the kind of competitive advantage that they're looking for. So action across the spectrum. My expectation is that this will pick up in the coming quarters. So while there will be uncertainty, there will be organizations, both mature and otherwise, who will start looking at data analytics as a fairly important way by which they address even the uncertainty that might be there in the economy.
So should we assume that this 10 to 11% sort of quarter-on-quarter growth that you've been reporting in your revenues over the last couple of quarters will sustain and accelerate, or is there any downside risk to that?
So on the medium term, I believe that we can sustain that kind of stuff. But obviously, in the short term, I did mention the sluggishness right when we started off, and decision making is getting delayed a little bit. So we'll have to see how quickly these large initiatives will fall in place. Out of the 5 big opportunities that we are chasing, even if we land 1 or 2, it can be a pretty big kicker for us. So I'm reasonably optimistic at this point.
Okay, all the best. Thanks a lot for joining in, and all the best for the future. That's Latent View Analytics. By the way, I just want to pull up the chart of Bajaj Auto. That stock is at the highest point of trade right now. It comes out with its numbers in just about an hour or two. And ahead of the earnings, Bajaj Auto is, bucking the market trend as well as going into its numbers quite strong. When we come back from the break, we'll connect with Kamlesh Shah, the CFO of Elecon Engineering, to discuss their Q3 earnings. Stay tuned.